So you're a business owner and you're making over $300,000 a year with your business, but you've been denied a home loan just because you write off most of your expenses. Now, this is a really common scenario that I run into, and I actually got a call from a client last week. She's in her 50s. She owns a business. She said she grossed about $800,000 to $1 million the last 2 years, but she was concerned that she wouldn't qualify to buy a home. And she's not the only one that has this concern. A lot of business owners feel this way. And this video is going to be dedicated to my business owners and self-employed people who are interested in buying a home, but not interested in using their tax returns. And the process to get qualified for a home loan, even though you're a business owner, might actually be easier than you think. My name's Darren. I'm a licensed mortgage and real estate broker here in California, and my channel is dedicated to helping people just like you learn what it takes to buy properties and help you buy properties. All right, now let's dive into my recent client call. My client, we'll just call her A, mentioned she was interested in buying a home in Irvine, California. Now, the median home price in Irvine, California is about $1.6 million. She is a first-time home buyer, and she was really concerned about qualifying for a home loan because she is a business owner. Now, in the last 2 years, she said she actually grossed about $800,000 to $1 million. And she was scared that she wouldn't qualify because she made some assumptions. The first one was that she needed to provide tax returns. The second, she talks about her age because she's concerned that she couldn't get a 30-year mortgage because she's in her mid-50s. She was thinking, well, the underwriters might not think I'll live that long, so I wouldn't be able to repay back that loan. That is also not true. And so her last concern is that if she buys a home in Irvine, but she actually wants to relocate to maybe Arizona, Texas, or Florida, would she be able to do that? So her business is remote and she handles almost all of her consultations online. So she was thinking about potentially moving to one of those other states for the business benefits. She did ask me if she decides to move to one of those other states, could I still help her with the process? And the answer is yes for those states. I am licensed in Arizona, Texas, and Florida. And I have a list of states that I'm licensed in down below. Now, obviously, you and I both know as a business owner, you're going to write off as much of your expenses as possible for the tax benefits. And going back to A's scenario, she's a business owner, so she writes off a good amount of her business expenses, which means she shows very little taxable income. And the W-2 she pays herself is not going to be that high. So this means for traditional loans, she does not qualify for the purchase price that she wants. And luckily for her, and luckily for you, you found me because I have some solutions for you. And I'm going to share with you the 2 types of programs that I shared with her that business owners use to qualify to buy homes. The first program is called a bank statement loan. So this is typically going to be a 12-month or 24-month bank statement loan. Now you get to choose the time frame. Typically the pricing is better for 24 months, but if your averages are higher for the 12-month, then maybe you go with that. But let me walk you through this. So you can actually use either personal bank statements or business bank statements. And how they're going to qualify you is they're going to total up your monthly deposits to determine your qualifying income. Now, if you use the personal statements, they typically just add up all your deposits each month, and you can use 100% of those deposits to qualify. Now, if you use your business statements, they're going to add up all the monthly deposits and apply what's called an expense factor, right? So usually they're saying, hey, businesses, they're going to have about 50% for expenses. So most of the time it's 50%. But if you have a CPA letter or if you can prove that you actually have lower expenses, that expense factor can be lower. For example, for barbers, I've seen that expense factor go down to 20%, right? Because they don't really have a lot of overhead. They just pay their chair fee and they don't have much else because they already have their supplies. And the biggest thing with the bank statement loan is there's no tax returns required. A few other things to know about this bank statement loan is that first, you're going to need proof that it's a legitimate business, right? Probably a business license or a website. And typically they want to see that you've been in business at least 2 years. And then if there are some one-time large deposits, those will have to be explained. I think the bank statement loan is pretty simple, pretty self-explanatory. You submit the bank statements, they look at the deposits, they calculate your income. And that's how you qualify to buy a home. Now, the other program is called a 1099 program. Now, this is for my self-employed people. Like I said, real estate agents, barbers, these are really good examples of it. The lenders are just going to take a look at your 1099s. They're going to divide that total by 12 for your monthly income. You don't need tax returns. And once again, sometimes they do apply this expense factor, right? That could be 10 or 20%. And that's going to lower your qualifying income a little bit, but that's to account for the cost of running a business. And so let me walk you through an example of numbers here. If your 1099 from last year shows 360,000, congrats, you made some good money. You would just take that 360,000 divided by 12 and you'd have an average monthly income of $30,000. Now, they might apply this expense ratio. Let's say it's 10%. So 30,000 minus 3,000, your qualifying income is going to be $27,000 a month in that scenario. And once again, something to note about this is that if you have a CPA letter that states your expenses are actually lower than that, then the expense factor can go lower than that. And on top of that, they typically want to see at least 2 years of being in business. Now, I'm just going to go over some other general guidelines for these programs. Minimum credit score sometimes can go as low as 620, usually 620 or 660. It's going to be the lowest. But as always, the higher your credit score, the better the cost and the better the interest rate you're going to get. The lowest down payment here is usually 15%, and the highest loan amount typically goes up to about $2 million. And on top of that, you will need some additional assets for reserves. So the lenders are going to want to see that you have a couple mortgage payments saved up on top of the down payment. So I hope you learned that even though you're a business owner or self-employed, it might actually be easier to get qualified for a home loan than you think. If you want to talk about your scenario and make this happen, you can email me at darren@realdarrenside.com, or you can even text me at this phone number. All my contact info is down below in the description. As always, thank you so much for watching my videos, and I hope this video brought you some value, and I'll see you on the next one.